Without further ado, welcome to AYP's webinar series on debunking year-end tax calculation myths. My name is Ruth and I'm your facilitator for today. Today's topic is on debunking year-end tax calculation myths in Indonesia. The webinar will be cut into 5 different parts. The basis of Indonesia's year-end tax, calculations, what's changing for this year, how to stay compliant, and finally the recommendations. Before we move on to today's presentation, I would like to clear some housekeeping issues quickly. As a matter of introduction, this webinar series has been prepared by AYP Group, a HR tech and services company with its headquarters in Singapore. We are well positioned with a regional presence that continues to grow in the ASEAN region, particularly across Malaysia, Thailand, Indonesia, Philippines, Vietnam, and Hong Kong. Moving on, as a disclaimer, this webinar series is intended to share with our audience some basic knowledge on year-end tax calculations and to clear up any misconceptions they may have. It is not, however, intended to convey any professional advice. You may, however, contact AYP Group directly if you are looking for more in-depth information or tailored advice for your needs. As today's focus is on year-end taxes, we will avoid sidetracking into unrelated HR issues. At the end of the session, we will have a short question and answer. Please use the Q&A feature at any time during this webinar session to ask your questions and like the questions you want to hear the answers to, so that the most popular ones appear at the top. You do not have to wait until the end of the session to ask questions. Recordings of the webinar will be made available after the session is over, and if anyone is experiencing any technical difficulties during the webinar, please don't hesitate to drop us a note via the chat function. So our presentation for today has been prepared by none other than our Indonesia team. Our speaker is Phoebe, the country head of AYP Indonesia. She has led her team for over 10 years in the fields of payroll, compensation, and benefits. Without further ado, I would like to hand this time over to Phoebe to give you today's presentation. Thank you.
Hello, everyone. Thank you so much for attending our last webinar of the year, which will be talking about the very crucial things that everybody needs to hear when it comes to preparation for year-end tax. So I'm Phoebe from Indonesia, and I'll be sharing on what to do and how to prepare your annual tax in Indonesia. So hopefully we can provide you with the most updated information to allow you the accurate year-end tax submission. All right, so today's agenda will be talking about basis of Indonesia tax, the calculations, and what's changing for this year and staying compliant, and see the best solution or recommendation. Okay, so let's start from the first topic, which is basis of Indonesia year-end tax. So Indonesia income tax law is based on we call Undang-Undang Pajak Penghasilan or Undang-Undang PPH Law number 7 of 1983, amended by Law number 17 2000, amended by Law number 36 2008. All right, so let's dig into the calculation details. Normal tax rates taxable annual revenue on individual tax residents is charged at the following progressive rates. So for 50 million rupiah or less is 5%, and 50 million to 250 million rupiah is 15%, and 250 million to 500 million rupiah is 25%, and more than 500 million rupiah is 30%. A significant proportion of individual income tax is gathered through employers' withholding. So employers withhold income tax on a monthly basis from wages and other forms of compensation paid to staff. If the worker is a resident taxpayer, the preceding tax rates. And if the individual is a taxpayer who is not a resident, the withholding tax is 20% of the gross amount. However, the amount may vary if there is a tax agreement. And the applicable tax rates on the severance payments are as follows. For the taxable income up to 50 million rupiah is 0, and over 50 million rupiah but not exceeding 100 million rupiah is 5%, and over 100 million but not exceeding 500 million rupiah, the rate is 15%, and over 500 million, the rate is 25%. And for the principal personal reliefs, here's the annual non-taxable revenues or penghasilan tidak kena pajak or PTKP. So individual taxpayer 54 million rupiah, and for the spouse is 4.5 million rupiah, and dependents and children, this is up to 3, is 4.5 million rupiah, and expenses on occupation, the maximum of 50 million rupiah on monthly basis or 6 million rupiah. And then the BPJS ketenagakerjaan or employee contribution for saving and old age security is 2% of gross income. This is full amount. And then the cost of pension maintenance, the maximum of 200,000 rupiah per month or 2.4 million rupiah. A tax resident is taxed on worldwide income. However, this may be mitigated by the application of double taxation agreement or a DTA. A non-resident individual are subject to withholding tax at 20% in respect of their Indonesian source income. Concessions are, however, available where DTA is enforced. So, individual requires to pay personal income tax. A personal income taxpayer may either be a resident or non-resident of Indonesia, and an individual is regarded as a personal income tax resident in Indonesia if the individual has been in Indonesia for at least 183 days of a 12-month period, has been in Indonesia at any point during the fiscal year and intends to live there for an extended period of time, or provided any evidence of desire to live in Indonesia on a long-term basis. Therefore, the main criterion to determine tax residence status in Indonesia is not nationality, but rather duration or stay or expected stay, and an expatriate who is a tax resident will be treated as one until the date of departure. And non-residents are subject to a 20% withholding tax on the revenue earned in Indonesia. And there are individuals exempted from personal income tax. For some foreigners are not regarded as Indonesian tax residents due to their special legal status, even though they live in Indonesia for more than 183 days per year or live and plan to remain in Indonesia. Such as people are exempt from paying Indonesia personal income taxes. They include the following people. First, for the diplomatic and consular staff from overseas, if they do not conduct business activities abroad and their home country extends reciprocal treatment to diplomatic and consular staff in Indonesia. And then the military personnel and foreign armed services civilian staff and international organization representatives. Identities of these representatives are mentioned by the Minister of Finance on certain occasions. All right. So what's changing for this year? In response to the COVID-19 pandemic, the Indonesian Minister of Finance, or MOF, has issued a regulation on tax incentive aimed at stabilizing the economy and encouraging productivity in certain business sectors. This is the addition to the tax policies and relief provided by the government under the government regulation in lieu of Law Number 1 of 2020 regarding state financial policy and financial system stability for the management of the coronavirus or COVID-19 pandemic and or in facing threats to the national economy and or financial system stability GR1 2020. So the MOF regulation number 44 PMK 03 2020 regarding tax incentive for taxpayer affected by COVID-19, MOF regulation 44 2020 came into force on April 27, 2020 and revoked the previously applicable MOF regulation number 23 PMK 03 2020 and MOF regulation on the same matter. The implementation of MOF regulation 44 2020 is further clarified by Directorate General of Tax or DGT Circular Letter number SE 29/PJ/2020 of 2020 regarding implementing guidelines for MOF regulation 44 2020 or DGT-CL 29. MOF regulation 44 2020 set out tax incentive designed to help taxpayer manage cash flow during the uncertain times brought about by COVID-19 and to help individual taxpayers in certain sectors. So we look at the incentive provided by MOF regulation 44 2020. So Article 21, income tax incentive. Under MOF regulation 44 2020, the governments will bear Article 20R income tax payments for the certain employees who qualify for this incentive. Because the Article 21 income tax payments are borne by the government, employers will be required to pay the full monthly wage of qualified employees. To qualify, an employee must receive income from an employer whose business classification code or Kode Klasifikasi Lapangan Usaha or KLU is listed in attachment A of MOF regulation 44 2020 is KITE company and it has obtained an ease of import for export purposes, facility from the MOF, and has obtained a permit as a bonded zone organizer or penyelenggara kawasan berikat, or entrepreneur in the bonded zone and organizer in the bonded zone. So the employee must also have a taxpayer registration number and have an annual gross income that is permanent and regular during the relevant tax period of less than IDR 200 million. And the KLAU for this incentive is the KLAU stipulated and reported by the employer in its 2018 annual income tax return or the KLU listed in the Employer Tax Administration data or the master file. If the employer only registered after 2018 or is a government institution, this incentive is available from the April 2020 tax period to December 2020 tax period. All right. So let's move to the year-end tax administration. The deadline for an individual tax return in Indonesia is on 31st March. However, during this year, government extended the deadline to April. So the tax registration and tax filing, all individual tax residents, including expatriates, are obligated to register with the ITA and obtain a tax ID number or NPWP. An exemption from registration is available for those earning below a non-taxable income threshold. Those who do not qualify as individual tax residents and married women who will fulfill their individual tax obligation jointly with their husband. And then the tax residents are taxed on their worldwide income regardless of the source, and they are also required to declare their worldwide assets and liabilities. Individual taxpayers are required to file annual income tax returns, the Form SPT 1770 or 1770S or 1770SS. In certain cases, monthly installment tax payments are also required. And the individual taxpayers are encouraged to file their individual tax return electronically through the e-filing system. They need to separately obtain an e-filing number or EVIN from the ITA in order to access the system. And the tax payments for the processing for tax payment, a billing code must first be generated, and the specific billing code is valid for 30 days, and we will need to be given to the bank so that the bank can process the tax payments. Total income tax is obtained by calculating the annual gross income, which is included basic salary, bonus, overtime, social contribution, and other allowances, then minus the total deduction, which is included the tax relief. Occupation allowance and social contribution, which I have mentioned earlier, then we can divine the rate required for each individual. All right. Next one is staying compliant. What to look out for when processing year-end tax. So the period of tax is 12 months from January to December, and individual tax payments are due by the end of the third month or after the year end before filing the tax return. For annual income tax return, taxpayer may extend the filing deadline by up to 2 months. And then the report must submit it through e-filing. Article 21 and 26, income tax returns and VAT tax return by e-filing. If the taxpayer submit the tax report or SPT directly or send it by post, then the SPT cannot be received and will be returned to the taxpayer. And please note, the individual must have the EVIN number prior to log in into the DGP or portal. So when we have successfully logged in into the portal, it is required us to update the profile first prior to continue the submission. All right. So there are consequences for the late reporting, late payments, and tax underpayments, as well as for the taxpayer without NPWP or tax ID. So let's take a look on the details. For the tax penalties and sanction. On the circumstances for late reporting, the penalties and surcharge are IDR 500,000 for monthly VAT return and IDR 100,000 for other monthly tax return, and IDR 100,000 for annual individual tax return, and 1 million rupiah for annual corporate tax return. And for the other circumstances for late payments in general, the penalties is 2% per month. And then the tax underpayment resulting from issuance of tax assessments, the penalties and charges is 2% per month for a maximum of 24 months, or 50% or 100% surcharge of the tax underpayment. This is depending on the cases. The taxpayer without NPWP is subject to 20% in addition to the standard withholding tax. And any underpayment of tax must be settled before submission of the annual tax return. And taxpayer can extend the period of submission of the annual tax return for 2 months at the maximum by submitting notification of ITA or Indonesian Tax Authority. So our suggestion to all of you to have the easy way and accurate and compliant. First, you may source a professional payroll management partner or consider getting on-cloud SaaS, HR, and payroll systems. So here's some advantage of outsourcing payroll to a vendor. First is cost saving, and then save space and cost of working facilities. Then ensuring uninterrupted work. You can focus on the company goals instead of doing the routines of payroll process. And then time saving, quality assurance. And next one is compliant. Vendor will make sure all local regulation and law are applied accordingly. And then the advantage of subscribing to a HRMS, first can reduce the paperwork, everything is online based, and then central storage and provide a bird's eye view, and then updated legislation change and ready-made text form for filing, and then option to automate payouts, calculate taxes, and enroll in benefits. And you may see the key findings and trends. So the top payroll-related challenges are these identified by responded with globally mobile employees or expatriates. You may see the year-end processing is 49%, and determination of income tax withholding is 49%. Then reporting of taxable compensation to local payroll is 46%, and so on. All right, so that's all for today's session. Please get in touch with us through our emails address at id@ayp-group.com, or call us or visit our website. And should you enjoy our today's session and interested in other countries webinar, here's the date and timing. Thank you.
Thank you for your informative presentation, Phoebe. I'm sure we all have learned something valuable. We had a few questions come in during the presentation which we have yet to answer, and you may also continue to send your questions in as we go along. Therefore, for the next part of this session, we will be both taking and answering questions. As you may have noted, we have already answered some questions asked during the presentation in our attempt to answer as many questions as possible. However, we have kept some general questions that we thought our audience may benefit from learning the answers to. So thank you for your time today, Phoebe.
You're welcome.
Okay, so our first question for today is, when is the due date for an employer to remit and report the income tax?
All right. So the income tax withheld by employers must be remitted on a monthly basis by the 10th of the following month and reported by the 20th of the following month.
Okay, so are there any tax compliance requirements when leaving Indonesia, especially for expatriates?
Yeah, so there are some requirements in order to terminate the residence, especially a termination of an expatriate that is planning to exit Indonesia permanently upon leaving Indonesia permanently. So first, an expatriate must admit an application to cancel their tax registration, and then the tax office will perform a tax audit on the taxpayer's return and supporting documents prior to granting approval to the deregister. And then second is therefore the individual should ensure all the tax related documents including bank statements, foreign tax paid documents, and then salary slip and employment contract and so on. So are readily available in anticipation of a tax audit.
Okay, so you mentioned deregistration. So
Mhm.
what are the documents required for this?
Yeah, so there are around six, I think. So first is, of course, the registration forms, and then a letter from the individual requesting the registration of the registration number due to no longer working at the company and leaving Indonesia. And then a statement letter from the company that the individual is no longer working at the company starting from the effective date, and then the original tax registration or NPWP card. And the other things is copy of exit permit only or EPO, and then the letter of the authority to enable the tax professional representative to handle the tax deregistration.
Okay, thank you, Phoebe. So moving on from that, someone wants to know what the deadline for annual individual income tax returns is.
Yeah, so the deadline of tax payments and normal filing of annual individual income tax return is on the 21st of the following year, 21st March. Saying it, for instance, an individual income tax return for a fiscal year like 2019 should therefore be filed by 21st March 2020, of the following year. And if there is any underpayment of tax, it must then be settled before submission of annual tax return, for example, for 30 March 2020, subject to change as regulated by the tax authority.
Okay, so keeping to the topic of annual taxes, is there any penalty if the employer is late in filing this?
Yeah, there is. So there is a sanction over this action. The penalty for late filing of annual tax return is IDR 100,000 rupiah, and then late payment of tax is subject to an administrative penalty of 2% per month and calculated from the payment due date. Yeah.
Okay, so what is the process of Indonesia's self-assessment and tax audit like?
I would say so. The Indonesia uses a self-assessment system for the tax assessment and audit process. So, which means that taxpayers are trusted to calculate, pay, and report their own taxes in accordance with prevailing tax law and regulations. However, the Tax Directorate General or DGT may issue the tax assessment letters to a particular taxpayer based on a tax audit or on the other information if the taxpayer has not fully paid all the tax liabilities. So yeah, a tax assessment letter may also be issued by the DGT to a taxpayer who ignores warning letters to file a tax return within a specified period. So a tax refund request will always trigger a tax audit. So due to the requirement for the DGT to decide on a refund request within 12 months, a tax audit will typically begin within a few weeks to several months from refund request date. Yes.
Okay, so was there any tax relief for the government in Indonesia in response to the COVID-19 pandemic?
Uh, yeah, Indonesia government released several relief in reference to taxation during this global pandemic earlier when this pandemic started. So the relief measure include reporting and payment relief with regard to the individual income tax return that is filed annually. So whereas the tax administration waived the administrative penalty that would be imposed if the annual income tax return for fiscal year 2019 and payment of tax is made by individual taxpayer on or before 30 April 2020. So then another relief that was provided is related to tax amnesty annual reporting by individuals that had been set to be submitted by 21st March 2020. Can be submitted by 30 April 2020.
Okay, so moving on for that, we're gonna talk about employees' tax rate really quickly. Is there any effort by Indonesia government, for example, if there's like a rate of deduction of income tax, so the employee is needed to pay only at a certain rate?
Mm, Yeah, so under Minister of Finance regulation, so the government will bear Article 21 income tax payments for certain employees. So this is known as a tax incentive, which is still ongoing until December. And simply put, this tax incentive requires employers pay the full monthly wage of qualified employees. So this set out tax incentive designed to help taxpayers manage cash flow during these uncertain times brought by COVID-19, and of course to help individual taxpayer in certain sectors. So this tax incentive is available from April tax period to December 2020 tax period. Yeah.
Okay, so what are the compliance requirements for tax returns in Indonesia?
Okay, so Indonesia tax residents are required to file annual individual tax return when their total income derived from a source in and out of Indonesia exceed the minimum threshold, which is between 54 million rupiah for a single individual and 72 million for a married individual with 3 children or dependents effective for 1st January 2016.
Okay, so what's the difference for the rate for non-residents in Indonesia?
All right, so non-residents are subject to a 20% withholding tax on revenue earned in Indonesia.
Okay, so our final question for today is what are the differences between the three forms? These are 1770, 1770S, and 1770SS.
All right, so as I mentioned earlier, the division of the three forms is used to distinguish the number of jobs and the amount of income received in a tax year. So in short, for the forms 7070 SS is used by individual taxpayer who have a source of income from one job only and the amount of total income is not more than 60 million rupiah. And then the 1770S is intended for individual taxpayer who have income from one or more resources and have another income from business or independent employment. And then for the 1770, it is used for individual taxpayer who have a source of income from a business or independent work without one main employer.
Okay, so with that, we've come to the end of our question and answer session. Thank you for your time, Phoebe. And without further ado, we have come to the end of today's session. For the questions that are still unanswered, please rest assured as we will categorize the questions and follow up with an email later on. You may also contact us directly at sales@justtalent.com should you have any additional questions. Thank you for sitting through our session, and we hope that it has given you a clearer perspective on year-end tax calculations. If you enjoyed our session today, please feel free to join our next webinar session of this series. Thank you, and we look forward to seeing you there.